Africa's wealth management market is estimated to grow by 60% in the next decade. However, there is still a massive disparity between low-income and high-income earners. One of the ways to reduce this gap is for retail individuals to create wealth for themselves gradually. Still, fundamental changes are keeping them, and of course challenges are also keeping them from unlocking wealth opportunities in a global fund. A report from Henley and Partners says that a total of $2.4 trillion total investable wealth is held on the continent, with South Africa, Egypt, Nigeria, Kenya, and Morocco accounting for more than half of Africa's high net worth individuals. My guest now is the CEO of Opportunic Global Fund, which is launching its global license fund on the 2nd of May this year. Kola Oyeneye is an experienced entrepreneur and investor and joins me live right now. Kola, welcome to Business Edge. Thank you so much for joining me.
Thanks, Tolu, for having me. Morning.
Good morning. So let's start with what we see in front of us. And that's obviously the need to empower a rising class, a rising middle class of Africans who can then access new markets beyond the continent's borders. But many people would even ask you, what's the state of Africa's middle class as it stands? If you look at Nigeria, many people have talked about the dissipating numbers or the disappointing numbers and the lack of socioeconomic mobility for many people being able to move upwards as well. So let's talk about where Africa's middle class stands right now.
So thanks very much, Tolu. It's a great way to start. Why we don't have accurate data across the continent in terms of the actual stand of the middle class, but we know that based on the World Bank's recent data on the top 10% and the bottom 10%, there's a huge disparity between the earnings of those at the top 10%, and that World Bank data is essentially saying that the top 10% across Africa actually controls 95% of the total income within the continent. And essentially the bottom 10%, controls about maybe 2 or 3%. And then the rest is now within the middle, which obviously tells us that the middle is extremely small. For any country and for any continent that is going to grow economically, that is going to lift the bottom of the pyramid out of poverty, the middle class is an essential part of it. And as you know, you and I know that Africa has been trying to fight poverty for decades. We've tried it through government policies, through aids from the West. It hasn't worked. And I always like to say that you don't create wealth by fighting poverty. You create wealth by unlocking opportunities. And that's what we're now trying to do with Opportunity Global Fund, unlocking wealth creation opportunities for Africans and diasporas and for generations to come.
So I know you mentioned, of course, data being an issue when we look at Africa's middle class, but I'll try to see if we can just paint a picture. When we talk about this wealth gap, we see the data, but the data also hasn't really been caught up to date, particularly with COVID-19, which we've seen has actually pushed back many of Africa's growth statistics because of how the pandemic hit. But how big is this wealth gap that we're looking at bridging? When we talk about it being a gap, what does that really mean in real terms for the Africans across the continent?
So when you look at the Henley report that you quoted earlier on, it did say that 2.4 trillion investable wealth is currently residing in the hands of Africans across the continent. And perhaps let me try and maybe paint a picture of what the gap looks like currently across board. So when you look at West Africa, what you realize is that most of the time for working class professionals and for entrepreneurs who actually have investable wealth to invest, what typically stops them from doing that leads to them being able to hold the cash that Henley is reporting is access to opportunities that allows for that investment to happen. And so what tends to happen is you then have HNIs, institutional investors, really being able to then, being the only ones that are able to make those investments, leaving the middle class out of investable opportunities and also the bottom of the pyramid out of the opportunity as well. Again, another report by African report says that only 2.5% of the middle class actually actively invest in opportunities to grow wealth. 2.5% of the entire continent. meaning that there's a 98 or so percent or 97% that doesn't actively invest in opportunities to grow personal wealth. So it's a massive gap, that we're hoping to fill over the next decade or so. Again, there's a 68% at the moment that is also, again, locked away from investing opportunities across Africa as well. So the gaps are in different places. I mean, when you look at the southern part of Africa, it's much better than what you have in the east and the west of Africa, simply because of investment education that lies in the southern part of Africa. But it's not so the same with west and eastern part of the continent.
So, Kola, I have to ask this question. That 2.4 trillion that I mentioned earlier comes from Henley and Partners Africa Wealth Report 2023. But I think the big question many people will ask is, where is this money exactly? You talked about the fact that there's this huge gap, 2.5 or so percent, that are not even investing at all. But when you look at it, they have the money. Are they keeping it under mattresses? Kola, please tell me, where is this money?
Very good question. Maybe what we should be asking is that why are they not investing? So we can't say where the monies are, but I mean, we can allude to, infer in terms of where the monies are. People keep monies in their savings account. They keep monies in typically savings account most of the time. And you and I know that savings account really, you set up your savings account towards investment. Savings accounts are not set up for wealth building simply because the return you get on your savings account, 1%, 1.5% that you get across any major savings accounts across the continent. So I think the question we should be asking is, why are they not investing? So let me give you a typical, personal story. So the first time that I had the opportunity to access a global fund was when we had in essence of about $250,000 to invest. And so what I meant was that a wealth manager needed to sit with us to plan how that investment was going to be, which asset classes, and for how long, what our investment objectives are, what are our return expectations. The question is, when you look across the continent with middle class, working professionals across the continent, how many people actually are able to access capital up onto that level? So as an entrepreneur who have built companies over the years, funds were available to be invested at that level. But for most entrepreneurs and for most professionals, you don't tend to have people being able to access that level of personal handholding for wealth building. So what people tend to then defer to are whatever is available, which means that fixed income products that allow you to come in at a very minimum amount, but then you get a shorter end of the stick. Therefore, the problem are three things, Tolu. Number one is access. So there's a high barrier to entry for most middle-class Africans in investing in global wealth building opportunities. Because of the kind of passport that most people hold across the continent, you're simply discriminated against, systemically through, DD processes, KYC processes. When you compare to your counterparts in Europe and in the globe and in the US, for instance. So access is a major opportunity because of the barrier that has been created. The second reason why most middle class investors don't come into the market and invest for wealth building are risks. So risk is a major issue for them, and there are three major ones across Africa. You have political risk. Most people are always very afraid about what is going to happen in their country. I don't want to mention the country names, but there are people who are holding on to their dollars and whatever local currency because they don't know what is going to happen. So political risk is a major problem. Currency risk is a major problem. There's a huge volatility. Devaluation of currencies, a major problem. And the third one for most people is then inflation. Yes, you invest and then you get a 15% return on your investment in the local currency, but then inflation rate is maybe 20%, 24%, in some cases right now 40% in some West African countries. The capital gains are eroded by inflation. And then the third reason why most of them don't come in is reward. Reward is tied into access. So reward for your investment, in that because you don't have the $50,000, $100,000, $250,000 to invest, you get a shorter end of the stick, 2% return, while institutional investors and high net worth individuals are getting 7, 8, 10%. And so Opportunity Global Fund essentially is solving the ARR problem: access, risk, and reward problem that has existed across Africa and locking middle class out of investment opportunities.
Okay, so I'm going to combine two questions here, because in terms of what you're saying now, you also have to have an audience, or at least some kind of base that has an appetite to be able to get through these risks and to be able to see the reward in the end. So when it comes to Africans on the continent and even Africans in the diaspora, what are you seeing that these group of investors have an appetite for? But let me also combine that with the reality before us. We're in the second year of sharply slowing growth, and investors are a lot more risk averse. We've seen how emerging markets have been pummeled because of this. Now, the World Bank is predicting global economic outlook for 2023 will slow to 1.7% from 3%. So even while we're seeing what investors may have an appetite for, what asset classes are global funds such as your own also investing in these kind of circumstances?
Really great questions. Let me take both of them after the other, but let me start with the first one, but first referring to the diaspora, because you did mention what are we seeing, across middle class. So when you look at Africa, Tolu, if we divide our audience into two, Africans on the continent and Africans in the diaspora, in 2022, $96 billion were remitted onto the continent across, the diaspora by Africans in the diaspora. For instance, a country like Nigeria got about 20% of that remittance value, which was about $20-point-something billion remitted. A majority of these remittances were people who had family members across the continent and literally just sending funds home to support them locally. One of the things that we're saying is that 96 billion, majority of that, I would project that about 50% of that potentially is an investable opportunity. Because a typical example, if I'm sending $1,000 or $500 home from the US or from the UK to support a family member's health emergency or health care or living allowances, over a 1-year period, if I invest $1,000 monthly for a 12-month period, that guarantees me a 10% or 8% returns on my investment over a 10-year a year period, which is $12,000. If I do $1,000 a month, that potentially gives me about $1,200 return aggregate over a 1-year period, which could become actually the remittance that I send home. So I am not then sending actually my actual fund, but I'm sending a return on investment as a support back home, for instance. So that's for the diaspora. And so what our fund allows for most people in the diaspora to do is to invest for remittance. So the opportunity to invest, and rather than actually sending your capital or your principal, you're sending the return on the investment on a monthly basis or on an annual basis to support families back at home. Now, to your first question, around what are we seeing across the continent in terms of investment, I think what we're seeing is that there is opportunity for investment, but investors, particularly middle class, are looking for the right places to invest. One of the things that they are concerned about is, taxes on capital gains, which has made us essentially structured OGF to be managed out of Mauritius and set up in the Cayman Islands for efficient tax on capital gains. Again, creating an appetite for the middle class to see that as an opportunity to build wealth. Speaking to what the global economy is saying, I completely agree with you. We came out of COVID. We went into last year when the Fed raised rates to fight inflation in the US, affecting the whole global economy. Growth is slowing down globally. But you see, the beauty of what we're doing, and for most dynamic global funds, is the opportunity to recognize areas of value. So what our research in-house is pointing to us that there are 2 or 3 asset classes that are currently picking up. For instance, commodities are big across the African continent. Our fund is very big on commodities. I'm not talking about oil, silver, gold commodities. Now I'm actually talking about real commodities, post-Ukraine and Russian war, where Africa now you have our food commodities being investable opportunities for export. So that's an area for us that is interesting. Real estate is an interesting place as well, where right now, because of high cost of borrowing in the US, there's an opportunity for African funds like us to leverage, because you have the capital, to literally leverage at coming early and buy some really cheap real estate opportunities to investing. And the third part of it are equities. So equities, are hugely discounted year to date, and there's an opportunity to come in as well and buy low and ride up the wave up there. We have an in-house trading team that is responsible for also trading, volatility. So when you combine all of that, it gives us an opportunity to, to really leverage where the market is at the moment and where it's going as well.
And that's going to actually be my final question to you, Kola, because the data is telling us that Africa's wealth management market is estimated to grow by 60% in the next decade. It's driven by strong assets under management growth, the ones that you've also mentioned, in most major markets. But for people, this might be the first time they're hearing about so much investable wealth that's trapped on the continent, and also the opportunity for them to invest beyond the continent. So in terms of this African growth management market, this wealth management market that's going to grow, let's wrap up with looking at the trends that you see will be driving this growth in the next decade.
I see three major trends driving it. One is the opportunity that Africans see in actually getting reward for their hard work. Over the years, that hasn't always been the case. And so a trend of fund performance, particularly African-focused fund performances, that really reward the middle-class investors, where they see that now, as opposed to getting 2% return on the dollar, they're getting 7, 8, or in our own case of forecasting, up to 15% return, on the dollar. That for me is a major part of what would drive the trend upward of investment. The second part of it is security and safety. The more the market, particularly the African market, sees that, their funds are heavily, are protected, particularly the principal, is protected, the more the market is willing to come in and actually deploy part of the 60% investable world that you're speaking to. And what ensures that, in our case, is ensuring that you have very solid governance structure for your fund. And the third part of it is really, education and just really ensuring that there's a platform that is easy for investors to come in and use. So for instance, in our case, opportunic.com allows for you to come in and quickly do that. So in the space of, literally, a few minutes, you're up and set up, haven't gone through your KYC and being certified to invest. And you can literally do it from the comfort of your mobile phone. I think for me, some of those are really the drivers of growth and drivers of access to wealth creation opportunities for the middle class in the next decade.
And that's what we're looking for. We're looking for Africa's middle class to grow, to bring those opportunities here and continue the growth that unfortunately seem to have been stagnated with COVID-19 and then Russia, Ukraine as well. But Kola, thank you so much for joining me today. It's looking like there are opportunities that even we as Africans may not fully be exposed to, but in situations like this, these conversations are just the beginning of the conversation and they're really the tip of the iceberg. We wish you the best of luck. Thank you so much.
Thank you, Tolu.